And welcome to a VSA Capital all-in-one podcast. And we haven't done one of these for a while because we haven't had a lot of news in the oil space. But today, delighted to have the CFO, Andy Matharu of Sound Energy, who have had their interims today. And let's not kid ourselves, Sound has been quite a difficult company for quite a while now. Andy is pretty new to it. In fact, there's been quite a lot of change, full stop. And today's interims, there's a few things I know that Ollie is probably going to quiz on, but I think we can sort of see the turning point coming here, and that it's time we all started looking at Sound again, because obviously the price is pretty much at a historical low. So first of all, welcome Andy, and Ollie, we're back again. Here we go. Let's quiz.
Thanks very much, gents. Happy to join you this afternoon.
So, go for it, Ollie. Go on. You start.
Congrats on your first interims, Andy, at Sound Energy. The income statement is relatively straightforward compared to last year's, but perhaps you can just give us a quick rundown of what's happened with the numbers in H1.
Yeah, sure, Ollie, I can do that. Obviously last year the numbers were dominated by an impairment of the assets, of the main asset, due to the sale or part of the partial sale to Managen. So we've not got an impairment of that magnitude in this set of interims. Probably the biggest variation in the income statement for this 6 months is the foreign exchange loss and gain, and that's obviously because we've got a dollar denominated debt and a euro denominated debt, and there's been quite a lot of movement in the US dollar, but we report in sterling, and I think that's really the most that's the area really of biggest variation on the P&L this 6 months.
Yeah, and then the balance sheet really tells the story for Sound. You've got quite a chunky asset base now, but also some fairly hefty liabilities. You're coming up to first gas at Tendrara, so what's been happening there? Because I guess that really is the key to how you're going to repay the £37 million of debt.
Yeah, you're quite right. The balance sheet is quite leveraged. We've got $18 million of loan notes outstanding with Africare, who are the offtake party for the micro LNG gas phase 1, and we have 25 million euros or thereabouts of euro denominated euro bonds outstanding. Of course, the whole focus at the moment is getting to first gas by the end of this year, which is still the case, and that will give the company much needed revenue. In terms of the impact of that on the debt, let's take the loan notes first. $18 million. They don't need to be paid back until between 2028 and 2033. So that's spread across 6 years. And that shouldn't be a problem to service, because by that time we should be into the phase 2 gas, which should start in 2028. The Eurobonds are due at the end of December 2027, and the company's restructured those bonds twice before. So to my mind, it wouldn't be an impossible task to restructure those again, and perhaps ensure that the repayment of those bonds jive with the cash flow from phase 2, which of course is going to be materially higher than the cash flows in phase 1.
I mean, Andy, just picking up on a point there. I mean, you obviously have this debt outstanding, but I mean, they're friends and family to a certain extent, because they're shareholders, aren't they? So I mean, It's not as if it's a looming sword of Damocles, if that's the right word, but it's something that's there to be worked on and negotiated. Is that fair?
I think that is fair. It is, and you're quite right. It's not hanging over us like a sword of Damocles because, in the case of the loan notes, it's Africa Gas. They're also an 8.5% shareholder, as you said, and they're also the off-taker of the Phase One gas for the LNG. And as I said, in the case of the Euro bonds, they've been restructured twice before, and given the fact that we would have free cash flow from first gas phase one at the end of this year, and then in 2028, much more material free cash flow when phase two kicks in. I think that the possibility of any restructuring within that sort of time frame is entirely feasible and possible.
Yeah, and I mean it's interesting. I mean your shareholder base, as you say, Africa have got 8.5%. I think it's called technically the Oil and Gas Investment Fund of Morocco. I think it's got about 12.7%.
Yes.
So I mean, but that's also your shareholder base, and the rest has all become very much retail, hasn't it? It always was quite a retail.
That's correct. Sport. We've got about 1/5 of the register is Moroccan stakeholders, and the rest of it is pretty much retail. Yes.
Yeah. And I think your chairman Graham Lyon said in his statement, you're on the cusp of a turning point. Well, obviously, when you're coming up to first gas, you are on the cusp of a turning point, I suppose. Can you, though, sort of describe a little bit in your own words just how impactful that turning point is?
Well, I mean, when you look at a lot of AIM-listed companies that start off at the start of the exploration cycle, to having gone through the exploration success, to appraise the project, to farm it out to a well-capitalized partner, and then to be, to go to first gas. That is quite an achievement to go from being a pre-revenue company to the point where you've got several $1 million of free cash flow coming in every year. It's normally the aim of most resource companies in the small and mid-cap space to get to the point where they have some operational cash flow and they're not just relying on the markets to be able to replenish their treasury. It is going to be quite an achievement for us when first gas comes in, because we will then change from being a pre-revenue company into a company that has its own operational free cash flow.
Yeah, no, pretty damn exciting, really. Yeah, it's great. Ollie, over to you again.
Well, so can you give us a bit more colour on the production rates and offtake deals that you've got for phase one?
Well, for phase one, we'll probably be producing about 10 million standard cubic feet per day. And that's going through a micro LNG plant. The off-taker is Africa Gas. That gas is going to be trucked from the site to their regional distribution hubs towards the north of the country. So this is why this first step is relatively modest, I would say, compared to the pipe gas. But nevertheless, it's an important step because it's enabling us to monetize that first phase of gas whilst the operator progresses phase two, puts in the pipeline, constructs that to the main grid in the north of the country, the Maghreb European gas pipeline, and on to combined cycle gas turbine generation in the north of the country.
And what's the pricing regime that you'll be under in phase one?
The pricing regime that we'll be under in phase one is around $8 to $8.35 per MCF or per MMBTU. So obviously below sort of TTF pricing that you'll get in that you've got in Europe. But I think that with phase two, there potentially is the opportunity for us to get better pricing. I think this first contract with Africa Gas is obviously based around the economics of a micro LNG plant.
And Andy, how do you, feel about Morocco in general? I mean, over the years, everyone's always said, it's a great place to do business because it's relatively stable, politically sensible, etc., etc. But then there's a lot of people who've had a lot of troubles, both in oil and gas and in mining. You've obviously got very good local shareholders. I mean, are you feeling very comfortable about the country?
Well, I think that we're probably the only company, and certainly in the oil and gas space, I think that's taken a project all the way through to the customer production where it is now. I'm aware of the difficulties that Chariot have had and the likes of Ganel leaving Morocco and some other companies that have had disappointment there. I think the difference with us is that we've been in Morocco for quite a long time now. We've got some very good relationships. We've got some powerful shareholders in terms of the Oil and Gas Investment Fund and Africa Gas, which are Moroccan entities, which helps having those shareholders. So I think that we are perhaps better positioned than some companies, given our shareholders and stakeholders. And I think that the fact that we have taken a project all the way to near production, I think is something that differentiates Sound.
Yeah. By the way, Andy, I think you've done really well. As I said at the beginning, you've had a very rough ride. It wasn't you? You weren't there. But it's been a rough ride. It's been very tricky, and you are on the cusp of a turning point. So it's pretty exciting. Have you got anything in these interims that you would particularly like to highlight as sort of, guys, you should have asked me about this because this is really good news?
Well, I think we've been diversifying in terms of the energy transition strategy, and you've seen that we've set up 2 new joint ventures, one in solar with Gaia Energy, who are a developer of photovoltaics in Africa, and that should give us a nice kind of baseline steady cash flow in a couple of years' time. The returns, obviously, in solar are not in the order of what you see in the hydrocarbon space, but they are much lower risk, and it gives you a steady cash flow. But I guess one of the really more exciting bits of what we've done recently is the joint venture in hydrogen and helium with GTEC. And you probably know GTEC, who are UK-listed subsurface technology company, very well regarded. The joint venture is to explore for naturally occurring hydrogen, white hydrogen, and helium in Morocco. We haven't got a license yet, and that's going to be the next step. But I think that this is potentially quite an exciting development, having a good technical partner like GTEC. And also, I'm quite mindful of the amount of capital, both in the public sector, but quite prevalent in the private sector as well, that is being attracted to hydrogen, early stage hydrogen ventures at the moment. It really is quite an exciting area that's getting a lot of attention from providers of capital into this space. So I think that is the joint venture is called High Maroc. I think that is one area that we really should keep a close eye on, because it could take off and be very exciting.
I appreciate we're talking to you here about your interims, really, and it's maybe more of a question for your chairman, but is this a suggestion you're becoming a Moroccan company, or do you have more ambitions in oil and gas and it could go elsewhere? I'm not expecting a full answer around it, just maybe a little bit of a flavour of sort of, we've got a lot of options, we need to work which way to go sort of answer. But what are your thoughts there?
we've got a lot of good relationships in Morocco that we try to leverage. Hence the JV with Gaia and Solar. Hence looking at setting up the JV for Hymerock with GTEC to explore for hydrogen in Morocco. But outside of Morocco, I think that we would want to kind of stick with oil and gas, stay in the hydrocarbon space. As you would expect with any sort of company, we do have an active new ventures pipeline. That's predominantly focused on looking at opportunities, either development type opportunities or production led opportunities in North Africa, the Middle East, and around the Mediterranean. So we're not looking to go too far away from that sort of area. And again, it's not going to be anything that's very different from what we're doing now. The focus predominantly will be gas. The focus is on conventional. We don't want to try and do anything untested or elaborate with unconventionals. And we need technical resources in the ground. We're not interested in kind of wildcat exploration if we're going to go into a new jurisdiction in oil and gas. So I hope that sort of answers your question. What we might do outside Morocco.
Yeah, it's a very fair answer, should we say? And as I say, it's a bit of a. This is more of an interims chat than a strategy strat. So I appreciate that, Andy, very very much so. Ollie, you got any more questions?
No, I don't think so. I think look out for the next few months what happens with getting to first gas, and obviously good luck to the team.
Thanks very much indeed, Ollie. Thanks, Andrew.
Thanks, Andy. It's very kind.
All the best now. Bye-bye.
So, Ollie, there we go. Sound Energy. That's one. I think it is on a bit of a turn, actually. I mean, it's been so difficult, and obviously it had all the should we say, the Parsons plate spinnings in its history and everything. So, I think it's it's definitely one that we need to watch, and people should be watching. I don't know your sort of take, but I don't see much downside. Let's put it that way, and the upside could be quite big.
Yeah, they've got £2 million in cash. The market cap's about 15 million at the moment. So it's kind of trading at the balance sheet value of the equity. So I mean, normally if something's in the resources place is trading at book value, it's quite cheap.
I think it is. I mean, look, a lot of E&P stocks are pretty cheap at the moment because it's so out of favour with investors. But at the end of the day, we're going to need gas. We're going to need oil for an awful long time. And, actually as a sector, it's probably one of the best investment sectors you can think of. I mean, obviously we look a lot at mining and the mining space this year. I mean, we're in a massive bull market, but stocks are going up 300, 400, 500, 600%. You can see people suddenly getting excited by oil and gas and similar sort of moves taking place because it's still the E&P sector is still so out of favour.
Yeah, and I still think that gas is the right place to be rather than oil. There's still a lot of potential for gas price volatility. Not had a particularly strong refilling season, and weather could still play a big role in Europe. Obviously, Sound is on a kind of fixed price, or it's got a range of prices that it'll receive in phase one. But if you've got a producing asset during a crisis period or higher pricing, then that is going to be more valuable to strategics.
Yeah, I totally agree. I think gas is the more favourable. Also, I think there is a big push at the moment for what I describe as Mediterranean European gas, which is very interesting to investors at the moment. And who knows, it may return to the UK one day if we get rid of bloody Ed Miliband, the most dangerous man in the UK. I'm allowed to say that on this podcast. Don't know. I've just said it. So yeah, look, and I mean, I think obviously at the moment doesn't help. Brent's a bit soggy, isn't it? And people use that as a sort of benchmark, be it for oil and gas and all of these things, and they look at it and go, $68, that's not very exciting. But there's all sorts of things that could flare up that could suddenly change that. But even so, at these sort of prices and these sort of gas prices, people make a lot of money. So yeah, I think trickling a little bit of money into some smaller E&Ps could be very rewarding over the next few years. Silence is golden. Ollie wasn't sure about that, but I think it's true.
No, I agree.
Sorry. Anyway, there you go. I don't think there's much else we need to add to this one. We should do some more all-in-one podcasts, actually. We'll try to. Anybody who wants to, any oil company that wants to say, actually, can I have a podcast? Do give us a shout and we'll do one with you. Because I think it's a sector that is not being talked about a lot at the moment, and that's why there is so much value in it. So I don't know if you've got any other final closing comments, Ollie?
No, I think, as I said to Andy, looking over the next few months as they get to first gas, and then start to see modest cash flow, and then they're away.
Sounds good. All right. Very good. We'll call it a day there. Thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.